We've got the Chief Investment Officer from SG Hambros, Andrew Popper. Hi, Andrew.
Good morning.
Let's grade the big four central banks and their performance this week.
Let's do.
Start with the Fed. For its performance and what it announced.
8 to 9.
So not bad.
Not bad.
You would
Not
have pumped 600 billion. That was pretty much in line with your projections.
I think so. The market expected a little bit less, but the Fed is doing the right thing. The most important thing is to set our expectations correctly. What do we expect from the Fed? What do we characterize as a success for QE2?
And what do you characterize as success?
What I would characterize a success for QE2 is to maintain stability in the economy, to maintain a steady growth of money supply, not to allow the economy and the aggregate demand to contract. I wouldn't characterize it as a success because it's not possible to set the standard at this level, to accelerate economic growth, to reduce the level of unemployment. The Fed cannot do that, no matter how hard they try. So if we are setting a task for the Fed to fine-tune economic growth and bring it to a level that would meet our expectations, it's unreasonable. They cannot do that. What they can do is to make sure there is no other calamity down the road.
Should the Fed be worrying about the rest of the world? Speculative money flowing into emerging markets and creating other asset bubbles. Should that be its concern or not?
Basically, no, because there's nothing they can do about it. They cannot pursue several objectives at the same time, which is very sad and very disappointing, but this is the reality. And this is the risk of this quantitative easing on the part of the Fed, that it is being wrongly interpreted by the outsiders as a salvo in the currency war. They're saying, well, the Fed is doing this in order to reduce interest rates and create more liquidity and bring down the dollar. So it's a competitive devaluation. That's the interpretation that the world is giving to the Fed move, although it is not. The Fed is not interested in the level of the dollar. The Fed is interested in maintaining certain liquidity conditions in the economy and not allowing money supply to contract. That's the mission of the Fed, to prevent deflation.
Let's get to the ECB, Andrew. You gave the Fed 8 or 9. The ECB, it did nothing, but it's quite eager to exit, isn't it, its easing policy?
Well, unfortunately, ECB cannot be rated with just one mark because there are so many countries in the Eurozone. From the point of view of the German economy or the French economy, they are doing the right thing. But if you look at the rest of the Eurozone, obviously they are going to suffer tremendously. So it's not so much that the ECB is not doing a good job. I think they are extremely good and they are technically extremely proficient. One has to have a lot of respect for the professionalism of the ECB. But they are dealing with an impossible task, which is to set monetary policy for a non-homogeneous zone. The German economy is doing well. French economy is not too badly, but the monetary policy is going to hurt enormously the peripheral countries of the Eurozone and is going to deepen the recession there. So it's not a good thing for them.
Andrew, quick comment. We haven't got time for the BOE. Do the BOJ. We know now what the fund will buy, this 5 trillion yen fund. Does the BOJ deserve a high grade or not?
No, I don't think so. I'm not impressed. What they are doing here is what the central bank should not be doing, which is, again, to fine-tune things. They don't seem to address, and they are not concerned about the level of liquidity in the economy. They seem to be more interested in picking winners and losers in the asset market and stimulating the stock market by buying ETFs. I think they're going too far with too much finesse, as you said. Yeah. So I'm not impressed by the BOJ.
Andrew, I wish we had more time, but thank you very much for joining us today. Andrew Popper there from SG Hambros.